The value of Australians' investments in cryptocurrency is plunging, with the sector suffering a broad-based sell-off, which has seen Bitcoin drop below $30,000. The total market cap of the crypto sector is now half what it was at its peak back in November, dropping from around $3 trillion to around $1.5 trillion. What is going on? Well, cryptocurrencies have been under pressure since the start of the year as inflation has sparked talk and then action on higher interest rates. Global equities markets have fallen. The S&P in New York has lost 18%. Our own market here is down around 7%. Now, crypto was believed to be a hedge against conventional markets, but it hasn't been behaving that way. Values were already falling. Last week, Bitcoin was at around $40,000 US, well down from its November high of $67,000. But then something big happened this week. A stable coin called Terra, that's a token that is pegged to the US dollar, collapsed. Stable coins, as the name suggests, are supposed to be less volatile crypto stores of money, but the coin plunged this week before recovering some value overnight. It sparked a chain reaction that has caused a big sell-off in the sector. Analysts are now asking if this is a Bear Stearns moment for crypto, harking back to the first investment bank to fall at the start of the GFC, and whether it poses a risk to the wider financial system. Here's the view of one trader on that.
I would say that at this time, the market for such stable coins and really crypto more generally is too small to pose a systemic risk to the traditional financial system.
So that's comforting on a macro level. But what about if you've tipped all of your life savings into crypto? Well, it would be a fool to predict what will happen to prices at the moment. Analysts do say that the cryptocurrencies are here for the long term, but this week's falls are a reminder that as an asset class, it is extremely volatile. So beware.
In terms of picking an investment strategy, we would suggest that retailers are careful and they educate themselves about what they're looking at, because these instruments do not operate like traditional stocks and bonds. And it will still be a long time before we really come to understand the fundamentals of what moves these markets.